Hi guys, welcome to today's webinar. We have a new guest on our trading lounge for this month. His name is Michael from Scandinavian Markets. I'm gonna do his trading bio shortly. So let's give guys like 3 minutes because we're 3 minutes early for them to join in. Yeah, so as we wait for people to join in, if you have any trading related questions, our theme for today is basically going to be exceptional trading, exceptional and professional trading for Forex traders. But we will also touch on, once we get a glimpse of what he trades, we will be able to understand more about other asset classes that he focuses on. So previously, if you've been attending our webinars, you know there are like different types of asset classes. So Forex is just one of them, where you trade currency pairs. And then we also have commodities. Commodities are segmented into metals, precious metals, and agricultural commodities. So under precious metals, you may have CFDs in gold, silver, platinum, and agricultural commodities would include things like coffee, cocoa, wheat, barley, um, anything that is grown for the export market. And then you also have energy commodities such as oil, crude oil, and refined oil, Brent. So there are two groups for oil, so WTI and Brent. And then you also have other things that are traded, such as indices, stock indices. So you have the New York Stock Exchange, the S&P 500, the NASDAQ, which is a combination of technology stocks. So the likes of AI, Microsoft, Google, Amazon. And then you also have um, commodity futures and options. And then you also have shares or equities. So those are the major asset classifications that you can trade. Our sponsor broker is HFM Kenya, and with HFM Kenya, you're able to trade all those asset classes. And another one I forgot is Bitcoin, Ethereum. Those are like the major cryptocurrencies. With cryptocurrencies, though, you need to be very careful because you might end up trading something that's not regulated. So you gotta watch out for that. Just a minute, I check on our guest, because he needs to join us shortly. All right, guys. So as I was saying, just a minute, guys. I hope I started the right meeting. Yeah, I did start the right meeting. Okay. So that's that.
Hey Sylvia.
Hello. Hi.
Hey.
For a minute, I thought I clicked on the wrong webinar because I usually have like a schedule for every month. So I had to
Uh,
double check when you told me that the URL is not working. Yeah,
I was clicking on the one from the emails, but this works. We're here.
yeah. It's nice to put a face behind the conversations we've been
Likewise.
having on LinkedIn and on email. It's actually nice to see you. So I think it's gonna be a pre-recorded show because today we had like a full schedule of class. I had a 2-hour class in the afternoon. Most of our members just requested that we do this and then they will watch it on our YouTube channel. So I hope that's fine with you. Um,
Yeah, no problem.
yeah, and then hopefully we can finish in 40 minutes. But if this link expires, I'm just gonna send you a second link, just in case we don't
Yeah, no
cover
worries.
everything in the first 40 minutes. Yeah.
Sure thing.
All right, so guys, this is the first time we're having Michael on our trading lounge. So I'm just allow me to read his trading bio. And then after his trading bio, we'll just get right into our discussion for today, which is exceptional trading for professional Forex traders. So yeah, Michael Buchbinder is a seasoned professional with over 20 years of experience in finance, investment banking, trading, and brokerage management with more than 15 years in the brokerage space. He is a partner at Scandinavian Capital Markets, where he has managed funds and built a deep understanding of the intricacies of liquidity and pricing. Michael's passion is helping traders improve their strategies to maximize returns. He emphasizes the critical importance of effective liquidity, pricing, and execution, thereby ensuring that traders avoid the pitfalls of high spreads, slippage, and bad execution as they scale up their trading efforts. So for the Forex traders, we do know that when your brokerage firm charges you like high spreads or commissions, they eat into your profitability. So today we'll be navigating through that. And Michael will be helping us just to understand more given his brokerage experience. So maybe, Michael, you can just start by telling us how you bumped into trading yourself and how you've managed to stay consistent for 20 years. You know, that's not a small feat. Yeah,
There you go. And I still have all my hair.
exactly. And it's not gray.
Yeah.
Yeah.
I got kids now and a wife, so I think that's what's going to do it for me. So yeah, I guess my journey started when I was a kid. I loved playing video games, and that kind of got me into trading. I was like, oh, fast moving video games, fast moving markets. Got to make quick decisions. So I was always attracted to the markets. My first job was with a stock brokerage firm. I was an intern, and it was just after 9/11, and they had to make duplicates of all of their client folders or files. Everything was still paper over then, and they didn't even have me digitize the files. I still just made copies of them. Um, so that was my first job, just photocopying probably like 15,000 client statements and everything like that, all their documents and KYC and everything. And it was really cool just getting to look at the statements and see what everybody was doing with their trading, and seeing everybody make money and hold their investments. It was really cool. So I did that for the brokerage, and that was my first little bit. Then I got a job working with an investment banker, putting together analysis of different kind of venture cap deals that he was funding on his own. And then after that, I graduated, and was working with a financial planner during the crisis of, I guess, 2008. And I just didn't like what he was doing for all of his clients as the markets were crashing. Instead of putting them in cash or money market funds, he kept them in North American. And these were clients that were like in their 90s that didn't have the time horizon to really wait for things to pick back up. So I was a little bit frustrated with that. I had a buddy from university who was doing trading. We got into trading ourselves, trading FX. We lost money very quickly. Then he got a job working at a brokerage, and the manager over there was, let's start our own white label or become an IB. And he was like, he called me up and he's like, let's do it. So this is like 2008, 2009. We became an IB and an interesting broker. And then from there, we quickly got our own white label. We started off with this platform called Act Platform, and we couldn't get any business with it. And then everybody was asking for MT4, MT4, MT4. And then we got an MT4 white label, and we started to really pick up our business quite quickly from there. Um, we built that up. And then as we built more capabilities, we started plugging in our own liquidity, managing all those things. And I had firsthand experience just building up that brokerage from an IB to a white label to all the technology, all the liquidity. I was able to build a trading strategy based off of seeing all the order flow coming through. I would kind of pick and choose certain trades. It was a really cool advantage. I probably only slept for like 3 hours here, 3 hours there for about like 3 or 4 years as we were like building the brokerage up, and I was doing the trading and making sure all the orders were getting through to the market. And then, so that was probably from 2008 to 2013, 2008 to 2012, 2013, 14. I left the brokerage and just started trading for friends and family. Then I was with another brokerage who was regulated, and they should have been good, but then during Brexit they went under, and
Mm.
like I lost all the funds. It was an awful experience having to tell my friends and family I'm like I lost everything. And I had to like pick up all the pieces. I got a job working at a factory, just keeping myself together, keeping things going. And that's when my business partner now, Arif, we were in chats. He messaged me. He's like, "Are you still trading, Michael?" I'm like, "Yeah, yeah." He's like, "All right, we got some guys. I need some help trading." And I saw that he had accounts at all these different places, but inside, the name is Scandinavian Capital Markets. And I was like, why do you have money everywhere, but everything's in your own name? He's like, well, he's like, clients deposit with us, and then we allocate it to the brokerages they like. I'm like, well, why don't you pool them and create your own brokerage?
Mhm.
And he's like, I never thought about that. He's like, if you can help me with that, let's do it. And so that's what really deepened our relationship. We made it happen. We and then I had the knowledge of starting as an IB and white label, so I knew how to kind of build everything from bootstrapping it. So we're kind of like the David versus Goliath kind of story, where we don't have any big venture capital firms behind us. We don't have any big family offices or rich daddies or princes or anything like that behind us. So we're truly David versus Goliath in how we built up our business because everybody's got so much backing behind them and everything. So, I had a lot of connections um, from with traders in addition to myself, and he had a lot of connections with wealthy investors. And we had one guy deposit like 15, $20,000. He made 10% profit, and then a month later he calls us up. He's like, "Yeah, you guys want to meet me in Portugal?" And we're like, he's like, "I want to put in $20 million." We're on our way. And from there, we just got lucky. We worked with that client, and all the money we made working with that client, we reinvested back into the business to actually make it a business. Before that, I was working during the day, working at night, and and then between running the brokerage. And my business partner was working for his father's business, driving the family truck, making deliveries, and we're both on phone calls in between everything and checking everything, making it happen. And then from there, we were able to start paying ourselves, and we saved all of the money, and we just reinvested into building a team and getting the money to get all these additional licenses to support our business. And we're still growing today, but luckily we have an amazing CEO who's in charge of things, and I have some time to, breathe and take some time with the family. And my business partner, he gets to live the life that he enjoys, and we get to focus on what we do best, is meeting people all over the world, building relationships, understanding their trading needs, and doing our best to service them and help them build their strategies as they grow their businesses.
All right. Your story is synonymous to most people who start out in trading. At some point, they end up losing their money. But the fact that you still kept at it even after that, um, I would say like a period where you experienced a lot of drawdowns, but you still kept trading. Really, it's a story of grit and resilience, which is very good. So maybe you can tell us, um, I know right now you don't do like active trading, but you're an investor. But while you were actively trading, what asset classes did you find yourself trading? And also, what would be your trading personality? Given some of us are not very patient, some of us
Uh,
can be patient. So all of us have kind of like different trading personalities and styles depending on our personas. So what was that for you?
While I was trading, I loved it. I was single, and every time I was in a relationship, I probably ended it very quickly. Just yeah, it's hard to be trading and in relationships. So it was an interesting time. I think the biggest thing is making sure that you are well capitalized, so you don't have to live off that money that you're trading from. That's tip number one. In terms of my trading strategy, I was either looking to trade the ranges, or I'd be looking for breakouts. So I
Mhm.
would essentially like pick a line, or, pick my support, pick my resistance, and make sure that I was waiting for the trades to come to those levels, and buy or sell based on that if I was swing trading. I would also be very cognizant of, okay, well, if it keeps going if it breaks through the ranges, then maybe I look for a trade on the breakout. So there's a lot of either waiting for those prices to hit those points, or when the price is around the support or resistance, I would be very aggressive in terms of defending the line. So I would essentially, if it's hovering around a certain support or resistance, I was very careful that if it would break them, I would, close a trade out quickly and then look to go the other direction, so that way I could catch the breakout. Um, I would like to everybody loves to trade gold, US 30, and pound yen, just because it gives you the biggest moves and stuff like that. I hate trading anything related to the Canadian dollar. I'm Canadian, so I don't know. I always get smoked whenever I trade the Canadian dollar, and it pisses me off. So I don't trade the Canadian dollar. the pair that I hate trading the most is British pound, Canadian dollar. I hate that the most. That's my least favorite to trade.
Mhm.
Um, and but yeah, it's between pound yen, gold, and US 30. Those were probably the most active ones. Just you get the most movements. So many traders are inside of them, and depending on leverage, you could always make some good profits. So those were the three that I liked. Between swing trading and then breakout trading, I would go through those. I don't like looking at anything more than anything less than, 30 minutes to an hour charts. So you want to really zoom out wherever you can and just think in the big picture. I still remember my wife is like, you can't wake up to take care of the kids, but you can wake up when you hear the alerts from your MT4 or MT5. So I'm like, that's different, baby. I'm like, that's different. So yeah.
All right, okay. You've just mentioned the Canadian dollar, and I've remembered its correlation to oil, given that Canada is the major exporter of oil to the US. Um, yeah, but maybe you can also just touch a little bit on your, because you've been in brokerage longer, I think, in your finance career. We kind of have different regulations. Like you find that the brokers who set up shop in Kenya or in this region, East Africa, they have their head offices in Europe. So we kind of have they're classified into two when it comes to regulation. So there's the non-dealing desk, and then there's the dealing desk. So if you're getting the Capital Markets Authority license, you file for a non-dealing desk simply because you're interested in a broker who will not kind of have interfere with your trades in terms of market manipulation and stuff like that. So when it comes to selecting the right broker for traders, especially beginning traders, what would you tell them is like the major selection criteria metrics that they need to look out for when they're applying for a trading account?
So I'd say there's probably a few things that you mentioned there's dealing desk or non-dealing desk. I could go both ways. I used to think you don't want to have a dealing desk broker, but then if you look at what happened in with the Swiss franc and the British pound, Brexit, those big swings and stuff like that, you've seen everything. So there's pros and cons with it. So the non-dealing desk broker, all they're doing is they're passing on your trade to another broker or to another prime liquidity provider or prime connection. So they're just taking the order, making the spread, the commission. Maybe there's a markup on a swap, and they pass it through. Now, the risk with that is if they're passing everything through and there's a gigantic market move from an extreme event, that brokerage could get priced out of their trades on a really wide amount. So if the so if for example the pound spread out really far and they have tons of exposure they're holding in the markets for their clients, they that could wipe a brokerage out. Whereas if it was a dealing desk and they were internalizing a lot of the flow and they were only hedging a portion of it, they could weather that storm a little bit better and they get hit a lot less. Now, with the other broker who's passing all the liquidity through, they essentially would only be liable for the amount that they have on deposit with that other LP that they're working with. So, in terms of risks, I'd say risks for extreme movements might be a little bit less with a dealing desk broker than a non-dealing desk broker. Um, but I understand there's a lot of controversy when people are working with brokers and they're like, okay, these guys slipped me because they're making the price and they gave me bad pricing and stuff like that. So there's that kind of feeling with the traders where they're like, okay, this isn't a fair trading environment because these guys are messing with pricing, and then they go and compare the pricing that they're getting from their brokerage with another brokerage, and they're like, oh, this is totally bogus. These guys are effing me. So there's definitely that frustration. Uh, I think it can really go both ways. So in terms of when you're looking for a broker to start with, I think you don't want to go to a broker that has zero spread, that has zero pips and zero commission and zero everything, because you got to pay from it from one place or another. So you got to think, how are these guys making any money? And then that's a clear sign there's definitely be booking you or they're dealing desking you or something like that. Because they're going to have to make their money some way. I'd say you want to look for someone who's pretty clear about their pricing and what they're and all their everything they're charging. Another thing is people get sucked into zero spreads, but maybe the spreads are zero for if you put an order for 0.01, but like what happens when you put an order for one? All of a sudden you get executed 5 pips later, or if you put a bigger order of 10 lots, 20 lots, 50 lots, you could be slipped anywhere from like 6 pips to 15 pips, depending on, what their pricing is like and what their top of book, the layers look like as you sweep the book, and you place bigger orders through. Um, so I'd say it's never super easy, and you always want to look for reviews and stuff like that. You want to see where people are regulated. For us, it's always been about building relationships because we were the small guys when we started, so we couldn't compete on the retail side because we couldn't spend $500 to get a client that would deposit $50. We couldn't compete on that level. So we focused primarily as we got started on the clients that on the bigger institutional type of clients where we could work with them and they would be placing their volumes across the month would be pretty large and we could help get them better pricing and that which would help their profitability. So servicing bigger clients at the beginning was really our bread and butter and still is our bread and butter. But as we've grown, we've been able to extend those competencies and competitive advantages that we've been able to build. We've been able to expand it more to the retail markets now as we grow. I believe I think it's important. I remember WikiFX. We're not listed on there and they're like blackmailing us. So don't look us up on WikiFX. But I remember I saw a report from them where they said that 70% of traders, their biggest worry is will they be able to withdraw their money from the brokerage that they're working with? That's 70% of traders' biggest fear. So I think it's important that you talk to the brokerage wherever you can, see where they have representatives available to chat with you. Being able to build a connection is important. I think those are the intangibles that really will help you when it comes down to it. Because what happens when you have an issue with trading? Who are you going to talk to then? Knowing that there's someone there that you can speak with, having a good relationship manager to help with things. I think those are important things that um, people don't talk about or think about when trying to figure out who to use as a broker. I think we've done a very good job. I haven't seen very many complaints for a long time, but there are times when you have extreme pricing and stuff like that, and we will work with you to understand what's happening. We'll work with the LPs to understand where they're getting the pricing from. And I think those are the things that help build trust. So for me, the reason why I started the brokerage was because when I lost all those funds from the family, like I just felt screwed, and nobody was going to talk to me, and everyone was just going to say, you're tough luck, Michael. And I was like, what the heck is this? And like when I did the brokerage before this, I saw all this stuff as well. So when I started with my partner Arif with on the brokerage side of things, I was like, we just got to do better. And like, our mission and our motto is everything we do is for the trader. We
Mhm.
need to do a better job really marketing that and telling that story. But um, I think that's what differentiates us from other brokerages is the fact that we're human. We're here to talk to you. We've flown all over the world to meet with our clients and build the trust. and we'll continue to do that as we keep growing. And like that's the best part about this job is getting to travel the world and then meet everybody and learn about their needs and then do our best to serve them and give them the best service and pricing that we can.
Right. That's a good thing. You mentioned about volumes and liquidity. Maybe you can tell us because your first on clients were institutional clients, at least you got some level when it comes to your execution and the commissions that you charge for you to be able to make do or rather generate business. You got that. So now transitioning to retail, which came way much later. What can you tell us is the difference between a speculator, who is a trader, and an investor with a longer term approach to trading? Because we have all types of clients in our industry.
Well, I'd say pretty much anyone who's trading FX is more or less a speculator. Even if you're holding a trade for a month or 3 months, I'd say it's still speculation. An investor is probably someone's going to hold something for, yeah, a year or more, or 2 years, 3 years, 4 years, 5 years. And I'm holding a stock and like, oh, I could have cashed out. And I'm like, oh man, but I know I'm holding it for a certain price. And like, I was like, man, if I just would have sold it and then maybe bought it back some more, but then if you're sitting on the sidelines, you don't buy it and then you miss out on the trade and it hits your level. So I'm just closing my eyes and I'm like, I know in time it's gonna get there. So I've taken my investment portfolio out of my banking portfolio so I don't have to look at it ever. And I just know that, the company's there, it's not going anywhere that I've invested in, and over time it'll do what I want it to do. Just you hate seeing your equity fluctuate here and there. So that's the
Mhm.
hardest part about being an investor or being a trader is just you've set a price target and you just got to let it develop and over time. So as an investor, I know that I'm in this stock and I believe it's going to hit this price. If whether it takes 6 months, a year, 2 years, that's I'm going to wait for that to happen. Whereas in the FX space, like you can have trends that last 3 months, 6 months, a year, 3 years, but then you don't see currencies going more than 3 years in a certain direction without it kind of taking a massive change back. So I'd say currencies are definitely a shorter term related to speculation because you believe it's going up one way or another. Whereas an investor, it's more you're owning an asset and you're just letting that kind of sit, wait, and hit its price target.
All right. So let's go now into risk management and capital preservation because I think that is like the backbone of trading. Like without that, you kind of like your journey into trading is cut short. So from your trading experience and also from your clients who've been with you longer, maybe even since day one, what kind of risk management tools do they employ? So like did you at some point make use of trailing stops or you had like hard stops or like where would you set your take profit given the fact that you said you were a breakout trader? So I would assume that in a ranging or a sideways market, you would identify the support and resistance zone that would confirm your bias into a buy or a sell execution signal. So, and guys, I've sent you a link, a second link on the chat section, in case this expires in a couple of minutes, because I think we still have a lot to discuss. So yeah, maybe you can touch on risk management in a little bit. Yeah.
Um, it's super important, right? Where to start with it. If you have a stop, never move it. I've been guilty for moving it, especially as a breakout happens, you want to stay in there, but then as it's moving up and down throughout that area, you keep getting knocked in, knocked out, knocked in, knocked out, and it's very frustrating until it actually decides to go in that direction. So you got to have patience, and if you get knocked out, just stay out is my thing. Oftentimes I've been guilty of jumping back in and then not putting on the stops and then just having it run wild, and I'm just like, what am I doing? Go take a day off. So um, Yeah, sometimes most of the time it never goes as planned.
Mhm.
And you just have to be very, very patient. And when those trades come, you need to be patient enough to let them run. You can move your stop loss up to lock in profits. But I think the biggest thing is just having the patience to let your trade idea unfold and get in there. Oftentimes you'll want to take profits too early and then you'll jump back into a trade when it's too late, and then you'll end up giving back all those profits. So um, risk management is definitely key around all that. And don't let your emotions drag you into the markets or make you chase some things up and down, I would say. So yeah, you never want to risk too much. You always got to know what the pip value is, what the trade size is, and then don't over trade.
Yeah, very important, especially for day traders. So like when it comes to, so let's just we at some point, maybe during our second hosting on our trading launch, we'd love to see like a live trading example, but today we won't do that. We won't delve into that. Just for people who might not really be understanding what we're talking about, like a visual presentation would be best. To better explain in terms of entries, exits, and where you put up your stop losses. So, guys, we'll still have Michael in the future, I believe so. So, Michael, maybe you can tell us when it comes to the types of accounts. You've partially answered this question where if someone is opening a zero spread account, they need to also check the other types of fees that are charged in that zero spread account. So when it comes to your brokerage firm, um, if someone wants to, I know you have different clientele, so you might have someone who wants to deposit $10,000. You might have someone who maybe only has $500 and wants to do day trading. So what types of accounts do you have in your brokerage firm so that people can profile themselves according to their capital bandwidth?
Well, yeah, I think we have the standard accounts. Like you can choose for. We do have some zero spread accounts or zero commission accounts. Well, I think it's zero commission. Spreads are probably a little bit higher on those versus the $4 commission accounts, which is I think the pro accounts. And spreads are probably much tighter with the commission accounts. So you can start for like I think as little as 25 to $50 deposit with us and jump into the zero commission accounts. Spreads will be a little bit higher. They're not gonna be crazy. And then when you jump into the $4 commission accounts, spreads will be a bunch more competitive.
All right.
But anyone can jump in from there. And then as you have higher deposits and you're looking for higher orders, like larger orders in terms of volume size as you're entering the market, then we could customize certain feeds for you to make sure that the pricing is pretty tight around those pairs that you like to trade and for the volume size that you're looking to execute.
All right. And then can you onboard clients from the African region or you have, because different brokers have different, I would say, onboarding criteria. So you tend to find that most US-based brokers do not accept clients from Africa. And then you find that like most European-based brokers do accept clients from Africa just because of maybe the kind of regulations are not the same between US and Europe. So do you onboard African clients, Kenyan
Yep.
clients? You do?
Yeah. We work with a lot of African countries and we can take clients on from there.
All
Correct.
right. So you're global. That's good.
Pretty much. Yeah.
All
Yeah.
right, that's good. All right. So I think we're actually winding up. What would be like your best trading tip to both
My
beginning and
best.
seasoned traders? And then finally, you can tell us how people can get in touch with you. I have your LinkedIn handle, but maybe if you guys have a website or any
Yeah.
socials that you use for recruiting people, you can mention. Yeah.
So my biggest trading tip would be Don't trade what you can't afford to lose. And if you're trading for a living, make sure that you're not trading for every day because it just gets super, super stressful. I think you asked me like what books I liked. I got
Mm-hmm.
right here The Trader's Mind
Mind
Journal
journal.
from Steve Ward. He's like a trading coach. He's awesome. He's worked with like Olympic athletes and stuff like that on mental performance and everything. He's written a book, Bulletproof Traders, as well. I think every, uh, I'd say you can make your own journal, but yeah, I'd say being able to reflect and look back at things is really, really important part of the journey. Um, what other tips can I have? What do I have? And yeah, I'd say see who you can talk with from the brokerage, and make sure you feel comfortable chatting with them and that they have your best interests in mind when choosing brokerage. I'd say don't get sold for all like the gimmicks that they can offer because those are tactics to get you in there. I'd say build a relationship. Trading is for the long term. I'd say you're not gonna find success, right away. I think I've the most successful people I've met, they said they spent like hundreds of thousands of dollars on all these different courses, EAs, robots, but every time they've learned a little bit. They've learned a little bit. I'd say look at the market and understand kind of where you're in, where you're in terms of is it a trending market? Is it a ranging market? Is Donald Trump in office, or is who else? A lot depends on what the government is doing. I think a big thing to really understand is governments really, really have a big role in where their currency is going, and they will tell you where they need the currency to be. You just need to listen for the signs. So back in 2012 to 15, when the EU said that they need to lower interest rates, they were telling you that, as they're lowering interest rates, they're going to sink the euro. And if you can read through the lines, that's a big, big thing. So listen to the central bankers, listen to the governments and what their agendas are. If they want to print money, then they're normally going to debase the currency. If they're fiscally responsible, then they're normally going to, the currency is going to rise. We're trying to understand the government, and that'll give you a long-term outlook for how to place your trade over a little bit. And the last tip I had is when I got to tour the New York Stock Exchange, I saw this really old guy sitting there looking at the ticker tapes. And I was like, "Well, it looks like you've been here for a while." He's like, "Yeah, been here for more than 40 years." And I was like, "What's your tip to success?" He's like, "Follow the trend. Just go with the
Mm.
trend, the trend." And yeah, so a lot of as traders, as individual traders, we like to think we're smarter than the markets. We know it's when it's going to turn and whatnot. That was my biggest mistake. And when he said that, like just a light bulb moment clicked, and I was like, okay, where's the trend and follow it.
All right. Thanks for your time. I think that's all the time we had. You'll send me how people can get in touch with you, and then I'll include that on the show
Sure.
notes. Yeah.
Sure. Scandinavianmarkets.com and Michael at Scandinavianmarkets.com or my LinkedIn, but I'll send you more information.
All right.
Thank you so much for
I
having me,
enjoyed this
Sylvia.
conversation. I hope to have you again on our trading lounge. You told
Good.
me your plans for coming to Nairobi is maybe on vacation, but we'll work something out. We can have you as a
I,
panelist.
yeah,
Yeah.
as soon as the kids are a little older and my wife can handle them herself, yeah,
All
then
right.
then I can travel again. I used to travel like every week I was on a plane, but now for the last like couple of years, it's been my wings have been clipped, so hopefully they'll grow back soon.
Thank you so much, Michael. A pleasure to
Thank
speak
you.
with you. Yeah. All right.
Thank
Cheers.
you.
Bye.